or refer to our financial services guide available at rask.com.au/FSG before acting on the information. Drew Meredith, how you doing?
Great. Good to be here.
Good to be here. This is very good to be here because it's our last 2 cents for a few weeks because
It is.
if I'm not mistaken, is it a junket that
A
you're going on?
junket. Yes, of course, a junket. Anytime you leave the country, it's a junket.
It's always a junket. Business
We're
or
going to be
pleasure.
within 400 kilometers of each other, I believe. So
Yeah, so it turns out that Drew's going to Europe at exactly the time that I'm going to Europe. Wasn't pre-planned, and we are 400 kilometers away from each other on one of those days. So there may be a random 2 cents where we kind of reach out and we think, you know what? Let's do a 2 cents
that's right.
in France somewhere, or is it France? I don't know.
France.
France.
In French. Maybe we'll do it in French.
We'll do it in French. But then it would be the Australian, the French Investors Podcast. Who knows? But anyway, we have a jam-packed couple of weeks for everyone. We've pre-recorded a few series, including a retirement series, which we've alluded to. So that'll be coming up in about a week or two. And we also have an investment mini-series, a 4-part mini-series, together with a live show that I'll be doing from Bath in the UK. So if you've ever been
You're
there,
doing it from the bath.
doing it from the Bath in the UK, which is a very popular thing to do in the UK, apparently, investing like live shows from a bath in the UK. Yeah, no, but I'll be dialing in. So there'll be heaps of things to do over the next few weeks, but we will be on the road a bit. So the 2 cents Q&A style segment will be bumped for about a month while that's all happening. Drew,
but load up your questions.
Load up your questions. Oh, yeah. We'll still answer questions. And particularly in the Rask community, there are questions getting answered each and every day, and I'm in there daily. I get notifications. Budget night this week, Drew. How did you celebrate?
How did I celebrate? I honestly think I missed it, to be honest.
Oh, did you?
It's like every budget now these days that most of it's already announced beforehand. And I think this concept that everyone is supposed to get something out of the budget is, I think, maybe slowly disappearing. That it isn't just this; it's actually a plan for the next year. It's not you get a car, you get a car, you get a car. I mean, it was very similar to that. They did extend the $20,000 asset write-off, so maybe everyone does get a car if they're paying tax. But I mean, there's, I guess, positive and negative signs in there. The positive is some, supporting cost of living and providing some electricity rebates and trying to help small business.
Mm-hmm.
Tax cuts were another big part, and a big part for all the kind of lithium and greener metals was it tax credits for investment in that sector. But probably one of the interesting things was the government was predicting a much lower inflation rate by the end of the year than the RBA was. And as always, as experts have said, this is incredibly inappropriate spending given the circumstances we're in and given inflation. And the other ones have said this is, it's targeting without spending too much on assisting people that are struggling with the cost of living. So like every budget.
Every budget. I did have a brief encounter with the great man, Evan Lucas, this week. And he and I are presenting.
Not short of an opinion, a strong opinion.
This Sunday night, you can catch Evan Lucas and myself and a few other folks at the Australian Shareholders Association cocktail drinks. So that's this Sunday in Melbourne. I want to repeat that. You can get tickets. I think still there may be 1 or 2 available on the ASA website if you Google ASA Conference Melbourne.
The 19th of May.
The 19th, we figured out. As the dates have got closer, we've slowly got more accurate with when the ASA event would be. And we can confirm it's this Sunday. So that would be tomorrow for those folks playing along at home. And then on Monday, Tuesday, the Rask team will be in Melbourne. I know Jamie will be at the event on a panel, Jamie from Water Partners, and the Water Partners team will have a bit of a booth going on type thing.
Something very special and surprising.
Something very special.
Very non-financial services. And everyone that's been emailing me for a book, thank you. We love the feedback. And there'll be more books at the ASA at our booth.
More books at the ASA, yes. And we'll also be doing a boots on the ground, not you and I, but there will be a podcast situation set up on the Monday. So at the ASA event. So come on down. If you're in Melbourne or you're coming to the event, it'd be great to see you.
Come and heckle.
Yes,
come down and heckle Owen while he's trying to.
Do not heckle me because
analyze companies.
I'm sandwiched between someone that's like a global fund manager and another one that's a global fund manager. And I'm going to be up there talking about like, oh, you can probably not do what they just
benchmark it. Just get a passive fund.
Here's how this would work, probably better. And then everyone will just throw tomatoes at me. But also, I'll talk about like it's an interesting thing because on the Sunday I'm doing a value investing workshop with the ASA community, and there's a heap of us actually in that. It's the biggest one I've ever done. But then on the Monday, I've got a speech about building a core portfolio, so for passive income. So it's half 6 of one, half a dozen the other. You don't have to choose between the investment strategy, as you always say. Also, record highs for Pro Medicus and WiseTech.
Credit to you.
Thank you. Yeah, I've still got a small portion of my Pro Medicus shares. So
200 million or something.
Both of those fellas, the Sam Huppert from Pro Medicus, co-founder, he's presenting on Monday morning, actually, and Richard White, don't know the time slot that he's presenting. He's at the ASA event.
It's been amazing. And then if you look what happened overnight, the Dow Jones hit 40,000 points.
Bro.
The last major milestone was in 2020 when it hit 30,000. And this is, despite everyone worrying about valuations and what's happening in the economy. And it's just, I think almost every major market's at an all-time high, apart from Australia, which isn't far off.
Do you prefer the Dow Jones or the S&P 500?
S&P 500.
Why?
For sure. Well, the Dow Jones is quite strange in that it's a weighting, is it 30 companies?
Mm-hmm.
Very narrow weightings and based on share price, isn't it? Not necessarily market cap, but the S&P is obviously a more traditional index. And I think it's more representative of the market versus the Dow Jones.
Yeah. 30 companies. A lot of people don't know that. That's why you don't see it a lot in index funds.
Yeah.
You see the S&P 500 though everywhere.
Hard to replicate.
Yeah. So yeah, it's up 19% in 1 year, the Dow Jones.
Yeah. And it used to be seen as the kind of boring index because it had more of the traditional companies in there, less of the tech companies compared to the NASDAQ, but it's kind of slowly included some of those bigger tech companies.
Okay. Over or under, S&P 500 over the past 12 months, 15%.
Over.
Over or under, S&P 500 last 12 months, 20%.
Over.
S&P 500 over or under, 25%.
Under.
No.
Over.
Yeah, over. 27.4% the S&P 500 has returned over the past 12 months. Think about that.
Over under.
All right.
MSCI China.
I was about to bring the hang up. Okay, yeah, go on.
Since January lows.
Well, since January lows.
Over under 25.
Over.
Yeah.
But not much. I would say like 30%.
It was like 27%. This is the last time I checked, which was yesterday.
But it's been on a tear.
It's like when everything looks like it's at the absolute worst, things tend to change. And then in China over the weekend, I think you saw that article I shared as well, which is the government is now considering stepping into the housing market and buying up basically, whether it's empty houses or unsold houses to stop this, probably the opposite problem that we have. They have an oversupply, we have an undersupply in Australia.
Yep.
And stopping the collapse in prices. And it's just kind of this, the first thing I said was, is that MMT? You're directly stepping into the economy. And it feels like it, just in a different kind of way. Maybe don't say that. Who knows? I get lots of feedback, I'm sure.
You're mixing.
Not
left,
that MMT
you're mixing left politics with Chinese.
There is a client of mine who's going to email straight away when he says this, but it is.
Gosh.
Yeah. Sorry, Fred.
Okay, let's finish it there. So yeah, basically emerging markets. Emerging markets was the only allocation in our portfolios that was positive last month in April. And we've got an active strategy there, but it was the only one that was positive because we had that inflection in interest rate expectations. But it could seem that the good Dr. Andrew Dermuth, Drew's alter ego, is coming back.
He's back, baby.
He's back, baby, because it looks like someone is calling for an interest rate cut this year.
In November at the Melbourne Cup Day meeting.
Right.
The Commonwealth Bank came out this week and said they're now predicting a cut in November, and that came after unemployment jumped.
It
3
leaped.
point. It's quite interesting. So this is like, and then we had a conversation with one of our team yesterday, but unemployment went up by from 3.8 to 4.1%, but more people were in work
Hmm.
than in the previous month. But what's happened is we've seen this surge in immigration and people re-entering the workforce. So now the participation rate's up, and as a percentage, the number of people that are employed is reduced. So it's kind of one of those weird things. And then someone in the office was saying, well, isn't this the whole point, that we're increasing interest rates to slow the economy to increase unemployment so inflation goes down? And you kind of get this kind of, what's the point? Is that
Hmm.
do we really want people out of work? But I'm going too political. That's twice in 10
Actually,
minutes already.
yeah. Geez, settle down. I actually, the reason I brought up Evan Lucas before I lost that train of thought, was because he did suggest he had this statistic that I think it was for every $7 billion of government spending, the estimated impact on inflation is 0.25%.
Yeah.
So there was quite a significant amount of feedback on the government, cost of living. Was it $300? Is it $300 for
individuals and businesses, I think, or
yeah,
small businesses? Yeah.
yeah, for electricity,
Yeah.
utilities?
Yeah.
That's a big lot of stimulus just coming floating straight in.
Yeah. And
That's
most people in that situation would be spending it, not badly, just spending it because the cost of everything's gone up.
yeah. So is it kind of like the government's fighting the RBA?
Yeah, 100%. And it's always the case. You're dealing with politics versus what they think is best for the economy. And it's just going to be that constant juggle. And I think inflation, we know that the direct impact of interest rates went from 0 to 4%. And I think inflation, the end part of inflation, is probably going to be due to the slowdown in the economy. But the initial part was just the freeing up of supply chains around the world, and immigration naturally will lead to, as it has in the past for Australia, lead to lower wage growth.
Yeah.
That's always been the case.
Mm. Yeah.
And you're seeing a return to the trends that were there beforehand, but we had this big jump in between.
Yeah.
So I use my hands aggressively for those listening at home.
Yeah. Drew's getting very handsy, as they say. So I've got a question for you, Drew. All right. Over or under, all right?
Here we go. Love an over-under.
GameStop share price today, 30% negative.
Today.
Yeah. Is it up?
Over. It's over. It's worse than that.
Okay, it's worse. Yeah. GameStop has fallen 30%
In a session.
this single day. We're recording on Friday, the 17th of May. It has fallen 30% today. This was, before today, it was a $12 billion company, according to Google Finance. Now it's $8 billion. But okay, I'm going to give you another one. GameStop. Remember, everyone would remember this company as like the video games retail store of the United States. And it was the first proper meme stock.
Like an EB Games, but
like an EB Games.
Not as successful, I don't think.
Yeah. So over or under 150% this month?
Over.
Yeah, it's over. It's up 168% in 1 month. So
meme stocks heavily shorted because they've got not cyclical but secular issues to do with their business, and then limited volume and people jump on it. We saw this during the pandemic. It was like not that we're involved in it, but one of the most interesting things to watch.
Yeah. But anyway, it goes to show that the anti-short selling brigade is still very active across the interwebs, and it goes to show the power of one influencer who is now rallying troops to go and buy GameStop shares.
It's not me. It's not me.
It's not true. Yeah. Remember, you're a finance bro, you're not an influencer. Yeah. Just so we can confirm. What else is making news before we get into questions this week?
Well, US inflation, if anyone was wondering why the market popped this week, if you can say 1.6% a day was market popping, US inflation continues to sink. So it was up just 0.3% for the month, and that takes the year rate down to 3.4. So it's just getting closer and closer to the target range of 2 to 3%. And I think it's going to be very difficult to get that extra little bit, no doubt. And that's why I'd expect rates don't move this year unless something bad happens. And more likely, if we see a real slowdown in the economy, they'll be cut next year.
Interesting.
We don't have the button today, sorry.
Yeah. No. So,
My own sound
okay. So you're saying rates don't get cut this year?
No.
So they will get cut this year. Okay, just so I can
Meredith's
confirm.
back. But then this is like the basic understandings. Technology. That's why technology is done incredibly well, because one, inflation's lower, so the value of your future earnings is higher. But they're also predicting that interest rates will, markets are predicting interest rates will be lower in the next two, some say this year, but more like 1, 2, 3 years than they are today. And then property did exceptionally well, because property, as we talked about, or will talk about on the retirement podcasts, is property becomes less attractive when interest rates are higher, because you can get a better interest rate holding a term deposit than you can holding a property, and that starts to reverse. And then the share market obviously just reacts to that immediately, as compared to the property market, which you naturally have to go through auctions and free market.
Yeah. Interestingly, I'm doing a webinar in about, what is it? 1 hour and 1 minute from now. I'm doing a webinar, and it's on 47 reasons property prices will keep going up. So that's available on the
47. If that's not bullish, I don't know what is.
well, yeah,
Is that false advertising?
no, we actually have 47 reasons.
Yeah.
So, Pete,
Because property's good. Is that one?
No. Wait. Pete Wargent from the Property Podcast, Chris Bates, who you know, and myself, we are just kind of throwing this out there that everyone has an opinion based on interest rate goes up, therefore property goes down. That's not how it works.
Not at all.
That's not how the world works. Like,
interest rate go down, property. Yeah, you were right. Yep.
Yeah.
Just like bond markets. Sorry.
But it's not. It's not that simple. And like people in the AFR come out and write these ridiculous things like property is annualizing down at 27%. And it doesn't work like that, because there's so many reasons that property is still important beyond just the interest rate equation. Now, we're not saying that property will go up. We're just saying that there are reasons why it would. And there are many reasons why it would fall.
Yeah.
But on balance, there's probably more reasons why Australian property prices will keep going up. So if you want to watch that webinar, it's on the Rask YouTube channel. It's also streamed to various Twitter accounts, LinkedIn, Facebook, basically everything that would take us.
That doesn't mean it's appropriate for everyone. That's
No.
what we talk about on the retirement series that's coming up as well.
And this is the whole point, right? It's like there's different times in your life when different assets will play a role. And as you and I said in the retirement series, and it will come up in a couple of weeks, is it's not the best vehicle. There's no debate about this. It's not the best vehicle for passive income. Unless you've got 100% of your residential property paid off, you're probably not going to earn any positive income from owning residential property. That doesn't happen. You might have one of those kind of multi-dwelling type places where like dual occupancy type situations where you can make money and you can maybe have that, but for the most part, it doesn't work that way. So we do, in the interest of time, Drew, we might jump straight into some questions if that's okay. We've got some wonderful questions sent in this week. Some of them are better than others. So the Apple Buffett is on sale. Writes in.
Apple Buffet.
Oh, I should do the disclaimer. Just don't forget that anytime you send in a question, we do ask for silly question and names. We do like it when you do not ask for personalized financial advice, because we simply cannot do that. If you want personalized financial advice, see a financial planner like, say, Drew here. There's a link in your podcast player for financial planning. Get it and get it now. If you want personalized financial advice, that's the way you have to go. You can verify if a financial planner is authorized to give you advice, as in they're actually legally allowed to do that, by heading to the moneysmart.gov.au website and finding the financial advisor on there. Okay, so the Apple Buffett is on sale, says. In Omaha this week, Warren Buffett... Buffet, sorry. There's only one T. Warren Buffett was asked why Berkshire Hathaway has sold nearly 13% of its Apple shareholding.
That's not a dig either. I've just spelled Buffett wrong and been called out publicly several times.
Yeah. Well, yeah, same with me. Buffett has two T's. Buffett indicated he didn't see value in the market at the moment and was happier carrying more cash and government bonds as their safer return was appealing in the current environment. It feels like a macroeconomic comment he wouldn't normally make. Michael Burry, who's the guy from The Big Short, played by Christian Bale, has also made largely negative comments about what he thinks the near future will look like. My question is, how much stock do you put in the comments made of the current financial environment by expert investors like Buffett and Burry? If they don't feel like it's a good time to buy, should we follow suit? So this is a great question, a wonderful question. And the comment about it feels like a macroeconomic comment he wouldn't normally make. Buffett says that same phrase about holding cash and government bonds virtually every year.
Yeah.
I can't recall
He's the
him not saying that.
most perfect example of a long-term investor. He'd be
Yeah.
trimming Apple because Apple's by far his biggest holding,
Yeah.
and it's worth hundreds of billions of dollars. I can't tell you exactly how much it's worth, but it'd be more like we'd say he's rebalancing, and he's potentially seeing better value elsewhere, and it won't be in cash and bonds for long because he's barely ever held that at very high levels, and he'd be looking to rebalance. And I think what did he just buy into? It wasn't Deere, or something else, wasn't it?
So I can bring up, for anyone that's watching right now, I can bring up Buffett's full portfolio as at the last 13F.
Chubb. He bought into Chubb, the insurance group.
All right.
That was the latest purchase. I think the bigger one here is, I was looking at Michael Burry, and there was a article in Bloomberg recently as well. I think it was yesterday, where he said he was long China. But I think my answer to how much stock do you put into comments made about the current financial environment, it's
Zero.
What
is that? Drew just held up two zeros. One in each hand.
These people generally have, Burry for at least has a very, very short term outlook. He runs a hedge fund that is, not trading daily, but it is trying to make significant bets. Very different risk profile to most people. And then you could say more broadly, and this is an attack on him, it was widely publicized, him and a number of other hedge fund managers were heavily short the S&P 500 and big tech earlier this year. So he's been negative for a while, and he's seen the market go to all-time highs during that period. So I think understanding the risk profile of these people and their investment time frame and how different that is to us and you and the way you're investing, I think is more important, because there's always going to be enough reasons not to put any money in ever. They make good headlines.
It would be, you'd be a fool to try and bet against Warren Buffett, but
he's not saying put everything in bonds, though.
Not at all. And I think he doesn't really care what you and I think.
It's like saying,
just like we don't really
put
care
everything in index funds when he does the opposite.
Yeah, that's it. Like I think this is a thing that people seem to think about. People like fund managers. I would never, ever, ever take a general comment from a fund manager and act on that.
Yeah.
Never, ever. Because they are professional investors that have so many different constraints that you don't have as an individual investor. They have to allocate money to investments as their job. They only have that. You can put your money in cash. You can go and buy a property, as we were just talking about. You can put it in an offset account. You can do whatever. You can deal with short-term pain because you don't have to do anything for anyone else. It's your money. These guys have to do all that. And more importantly, as Drew tacked onto the tail in there with Burry, he loves headlines.
Yeah.
There's nothing more. Look at his character as portrayed by Christian Bale in The Big Short. He loves nothing more than headlines.
Being in the news.
Yeah. So don't act on any of that. But here's Warren Buffett's top 10 shareholdings as according to the ticker terminal. I would highly recommend anyone that's interested in individual investing, like companies and that, go and check out the ticker terminal. It's a cheap version to get really high quality data. The top shareholdings are Apple, Bank of America,
135 billion.
135 billion. It's 37% of the 36% of the Berkshire portfolio. That's after he sold 13%. Or 116 million shares. So Apple as 36% of Buffett's portfolio. Bank of America at 10.5% of Buffett's portfolio. American Express at 9.3% of his portfolio. Coca-Cola at 6.6%.
I would say investing in a
Chevron,
credit card company,
5%.
a retail company, a bank, and a electronics company is pretty bullish for the economy. Holding 40, 50% of your portfolio in four stocks that are
Yeah.
directly linked to the consumer is pretty bullish.
Well, Chubb, which you mentioned, is only worth
Insurance.
$6.7 billion in his portfolio. It's 1.8% of his portfolio. You're probably wondering, like, how do you get Buffett's actual portfolio? Well, in the United States, companies are required to lodge their investment. The investment companies are required to lodge their holdings with the regulator. It's called a 13F filing,
On a delay.
but it's on a delay. It can be weeks out of delay, so you don't actually know, but you get a general gist of what's happening. But yeah, you can see, what else can you see here? So the Apple is by far 36%. He's very, very bullish. It would be prudent for him to sell some of that. He got American Express. I think American Express for Warren Buffett. I'm just going to Google this. I think he got American Express, Buffett's biggest investment. I wrote about this a little while ago. Oh yeah, these 7 stocks changed his life. I wrote an article about it. So he bought. Uh, he bought Procter and Gamble shares in 2014. He bought Gillette for $600 million. He bought See's Candy for $400 million 50 years ago. It's worth $50 million now. He bought $1 billion of the Coca-Cola company in 1987. So that Coca-Cola shareholding there, Drew, which is number 4 on his list, it's now worth $24 billion. He bought that in 1987. So if he holds that, that does not mean that we should go and buy Coca-Cola.
No, not at all.
He bought that, over 30 years ago. But the key thing with that, this is really interesting about Buffett's holding in Coca-Cola. He bought that for $1 billion, but I think it now pays nearly that. I think he gets like $700 million a year in dividends. He bought American Express in 1993. That's my number I was looking for. So it's worth $34 billion. It's his third biggest holding. He bought that in 1993. He's well up over 15x on that. So and then he also owns Moody's. That's like his 10th or something biggest position, 9th, something like that. He owns $9.7 billion of Moody's. He got that because he owned Dun & Bradstreet, which is like a credit checking
like Equifax.
agency.
Yep.
Yeah. He got that many years ago. So if you look at his portfolio as we have done just now, that does not mean that we should go and buy it. And if he's moving some of that Apple shareholding, unless someone that wrote in this question, which is a wonderful question, unless you know his portfolio and what he's planning for, you have no idea if that context really matters to you. And for us, like I don't know about you, Drew, but before he did that, I didn't have 50% of my portfolio in Apple. Did you?
I did not.
Yeah. Okay. So that probably helps explain that. And Buffett, to be honest, I believe Buffett will pay a dividend, or Berkshire will pay the dividend once Buffett passes on from his role.
And this doesn't mean some of these people don't have good ideas, but you don't want to be relying on someone specific with a different time frame or context to yours for your ideas and your big decision of when to go in the market. And we know if you're younger and you're saving, well, all that matters is going in and doing it diversified, not making a call on whether the S&P or the NASDAQ or Apple itself is overvalued.
Yeah, it's a really good question. So yeah, look at the companies that they own. I love studying Buffett's portfolio, but I don't take his actions as my actions. I love his insights. He's amazing. And I'll learn from him, but I'm not going to replicate his portfolio for my own. There was another question which is sent in, which is JK rolling out of it, who writes in and says, if the Victorian state government was a listed business, what would be your analysis of its performance and future prospects, Drew? Would you invest in it?
They didn't say Drew. They said
But well, you seem to be mixing politics with pleasure lately, so I figured why not just ask him. So, if the Victorian government was a listed business, what would you What would be your assessment?
Let's just be honest, it's not, and the federal government isn't either. So I know what what this person's probably referring to, which is the amount of debt and what's happening with the economy and where money's being spent. But
Mhm.
it does matter to a point, and we can see why it matters at the moment. A lot of spending on infrastructure is creating inflation and shortages of labour, which is good for employment, but it's sending the price of a lot of things up. Uh, I know. I think any government that I know this one isn't able to make its own currency, but any government that has the ability to raise taxes, whether that's on land tax or properties or whatever it happens to be, I think that's the kind of monopoly you want in a portfolio, isn't it? Like you can raise taxes and increase your revenue tomorrow if you want to, and then people can complain, but they can't vote on you for 4 years, so you don't have to do
Well,
anything about it.
yeah.
Um, 3 years, 3.5 years.
Go
I,
on.
I kind of get what this refers to, and it's probably, I think there's something to be said about diversifying your spending. Australia and Victoria in particular has been incredibly focused on one sector, infrastructure and construction. And that started during the pandemic and it's continued, and that has its own impacts in other ways, and it impacts the economy more broadly. So you probably want to see more diverse range of income sources for the government, and thus a more diverse range of investments and distribution of that capital.
Mm. Yeah, I agree with everything you said there.
You're not going to have you got to sit on the fence.
Yeah, no, I'm just trying to think about. I was trying to think if for people this question was like if it was a listed business, and I was trying to think about what would it be. I think it would be like a REIT because it's like heavily indebted, barely managed that well fiscally, and people are like really unsure about the future of it with interest rates and whatever. But I mean, structurally thinking about it, Victoria is growing. It
Bursting at the seams.
yeah, Melbourne is already the biggest city, depending on how you define the limits. But Melbourne is already the biggest city in Australia, and it will be undoubtedly the biggest city in Australia by the end of this decade. Like it will just blow past Sydney. So Victoria has a lot going for it. Obviously, the train system is not one of those.
Caught the train this morning. It was fun.
So it's probably like an inefficient, over-indebted business that's structurally growing, and
like a toll road or a
with
railroad
a CEO that's like getting golden handshakes. So, so yeah, I mean, we'll see what happens, I guess. But in other news, Drew, for long-time listeners of the show, let's just get a pulse check on the market. What is Dubber up to lately? Would you say if over or under Dubber Group, which is a Melbourne-based company,
is it trading?
since the
Sorry.
since the beginning of 2024, what would you pick the share price to be? Can't Google it. Just
I was just about to
pick a
Google
number
it.
out of it.
Minus 72%.
It's only down 48. All right. Zip Co. 12 months. Zip, the buy now, pay later business. 12 months. What is the share price? Don't Google it.
Zip 12 months share price down 12 months. Up 5%.
Up 133%.
A little bit.
That's one of your major positions in your portfolio. I figured you'd be all over this.
Yeah, the value of it didn't touch the sides when it increased 100%.
Okay, last question for today, Drew. Why don't we tackle? Why don't we tackle the one from Meg? Meg writes in and says, "My super of $1 million is with the Ware Super. Where do I find independent advice about remaining with them or switching to a financial planning firm? Everyone I approach wants to manage my money, and I feel they are in a conflict of interest situation." And they go on to say that they're older, they're in retirement phase. Now, we've got a series coming up on retirement, Drew, but Meg, in this instance, we're not giving her advice on her super. We're just asking where could she get advice and feel comfortable with that?
Well, no, I won't say that.
What, the retirement podcast?
Not just us. I think this is one of the biggest issues that there are, Aware as a product provider, and they do have advisors. I don't I don't think they have a massive group of advisors. I'm not sure what their policies are, but they're generally going to provide you advice on contributions and the more general parts of superannuation. You need to find an advisor without a product, an independent advisor, so to speak. But most financial advisors that aren't employed by a bigger corporation, so anyone boutique or even parts of dealer groups, generally have an obligation to consider all the options that are available to you as a person. So it might be just having to call up a few advisors and arrange a meeting somewhere nearby, somewhere wherever it happens to be, and ask them if they're able to provide that service. In most cases, our obligation is if we see you just want to look at that superannuation fund and reviewing it, we have an obligation to consider your whole situation. So that's what advisors will generally look to do. And I'd suggest going through that process. If you're 69 and you haven't thought that much about your retirement, definitely.
Yep.
But I think it's just try a few, call a few, and there's no need to change. But if it feels like it's product, then that's not the advisor. They're just recommending a different product. It's not the advisor for you. They should want to understand what your situation is, what your objectives are, and how the super fund can be best suited to you.
Yeah, and you can ask them about that as you go in, Meg. And there may be options that are better for you, and just ask them to explain it and justify it in writing. They do, like, the financial services industry has cleaned up a lot since the Royal Commission, and there are still wonderful advisors out there. You can get matched with a financial advisor in the show notes. You can head to the moneysmart.gov.au website, and from there you can also get check the financial advisor and make sure that they act under a license. You can see what their qualifications are. And one of the things that Drew says in the upcoming retirement series is find a financial advisor that knows retirement. Don't go to a financial advisor that's has a lot of younger clients and then expect that they're going to be experts in late 60s, early 70s type financial planning, because that's probably not the case. Get the best advice for that type of situation. So we are going to come back in a few weeks, Drew. We've just jumped out of the studio. I can see you're still in it right now, but we've got quite a few episodes in the pipe for folks. You can contact me at any time via the Rask community. That's community.rask.com.au. And there are going to be some great podcasts coming up, including some live shows that are going to happen. And one of those live shows is going to take place here on the Australian Investors Podcast. So I'll be dialing in from the UK and answering questions. So keep an eye out in your podcast player. We've got wonderful podcasts coming up with Dave Gow, a crossplay from Tim Duggan. Got some hidden gems, some stock stories to come from the ASX. And
I'm going to spend the whole time preparing as well, reading up on everything, politics, on monetary theory.
Well, you could probably hear the dogs barking in the background there, Drew.
Not the turkey? I thought it was a turkey.
Yeah, turkey was on the roof this morning. But you could probably hear the dogs barking before. The reason that they're inside right now is because I got some books delivered from Amazon to take over to Europe with me. And this morning they decided just to receive those parcels for me, and have subsequently ripped up all of the books that I ordered to take away with me. So it looks like I'll be rereading Poor Charlie's Almanac again.
Cover Kindle.
Yeah, we'll see about that. I just love a physical book, as you can tell from the mess behind me. But Drew, good luck with all the prep. You'll probably need it when you're away. Get that stock picking up to date, and I'll catch you on the other side, mate. And your dad joke.
Staying on theme here too.
Okay,
you can't go away without a dad joke. We missed a couple.
Yes.
What kind of chocolate do they sell at the airport?
Don't know.
This is a good one that links back to our UK versus US, and I've almost lost a client over that. Sorry.
I don't blame them, to be honest.
Yep.
Like American chocolate is yuck. Go and check out Tony's chocolate. Go on.
I'm going to say that again. I think we've lost it. What kind of chocolate do they sell at the airport?
Yes.
Plain chocolate.
Oh my god. Well, Drew, thank you for that. I'll give you a 5 out of 10. You can, if you did get your question on the show today, let us know. Write into us at Rask. You can get a free value investor program. Drew's book, The Golden Years with Jamie Nemsis, is also up for grabs. Write into Drew at wattlepartners.com.au. If it takes him a few weeks to get back to you,
it's because I get 50 a day.
and because he's away. But write in anyway, and we'll sort that out for you. And thank you, Drew, for doing that. Really appreciate your time, mate. Have a wonderful trip and enjoy what's left of the day.
You too. Good to see you.
Thanks, mate.